Earlier today we got the latest update on US Non Farm Payrolls and the markets didn't like it. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Earlier on this afternoon we heard the latest update on US non-farm payrolls. This was for last month, that's January, and they were much better than expected. The expectation was that they would rise by 190,000 on the month. The previous month they had risen by 233,000. They actually came in at plus 517,000 and the prior month was revised up to 260,000. Very good indeed. On top of that, the unemployment rate fell to 3.4%, which by my reckoning, is a new 50-year low, and average hourly earnings also dropped back, suggesting that there's no real inflation in wages either. So it all sounds pretty good news, but the markets didn't like it. Sold off very aggressively. We saw stock indices plunge before the open. We saw the dollar soar, and we saw gold and silver really fall sharply. Gold back below $1,900 an ounce and silver down below $23 an ounce. Silver, in silver's case, we're down nearly 4% at one stage. So what's it all about? Well, the markets, this is one of the weird things that's been going on, and bear in mind that we've heard lots of job losses in the tech sector, the financial sector, the media sector, and yet we've got this big growth in jobs. And as far as the Fed's concerned, they're saying that this is a little piece of the jigsaw. Why is the employment situation so rosy? And yet they have raised rates so aggressively, did so for the last time, well, not the last time, but most recently this Wednesday, taking up the Fed funds rate to 4.75%. Bear in mind, in March last year, it was just 0.25%. That was the upper band. Now, I should say this is the biggest jobs number since August 2022. And interestingly enough, yesterday we saw the highest on the S&P since August 2022 again. But of course, we have pulled back. Now, we are into the main trading session. We are starting to rally back. I think the feeling is that the market got a bit spooked by the strength of those those job numbers, because it felt it gave the excuse to the Federal Reserve to keep on raising rates up and beyond what the market expects. Bear in mind, the market expects the Fed funds rate to terminate at around 5% and then for the Federal Reserve to start cutting rates towards the end of this year. The Federal Reserve have kept on and said, no, there's more rate hikes to come and we're not going to cut this year. It's not happening. And now we're seeing the market react to the situation. Other bits of news, we heard from Apple, Alphabet and also Amazon last night. They all disappointed on their revenues and earnings per share. They all got knocked back, and that follows on from a great load of results from Meta Platforms, who also announced a $40 billion share buyback and had positive forward guidance. So that's how we're going into the weekend. I hope you found that of interest and helpful. If you have, please like and follow, and thank you for watching. Best of luck with your trading. Goodbye.